Hello guys, what's up? Welcome to Huobi Live Market Chat, and I'm your host today. My name is Johnny. Today we also have Benz and also Stephanie here. Hey Benz, hey Stephanie, nice to see you here.
Hello, nice to see
Hello.
you.
Hi.
Yeah,
Yeah. Today we have some interesting topics. First of all, we'll have an general overview of the market. We'll go through the prices of Bitcoin, also Ethereum, and see how they're going. And then after that, Benz will cover some things about the FOMC meeting and also the CPI data released last week, and probably we will drill a little bit deeper there because we want to see how the prices we added to the news, and also we're gonna do some analysis there. And after that, we also want to talk about the Starknet tokens because Starknet is going to release their tokens in October, and that will be a news that we have to pay attention to. And lastly, no, last but not least, we also have Aptos tokenomics because Aptos just went live on exchanges today, and the prices. I think the prices were quite volatile, and definitely we're going to look into some details of the price action there, and also we're going to talk about some background information about Aptos. Stephanie, we're going to share. We'll be sharing some nutritious thoughts and also some information that you have to learn. And then lastly, we have the Bitcoin on chain metrics because I want to share with you guys because I think that Bitcoin has been trading around 18K to 20K this range, and I think we definitely have to watch for some on-chain metrics to see if Bitcoin is coming to a local bottom. And also yeah, I think that the probability is there, and therefore we have to just pay attention to how price is going. And then let me just share the price chart of Bitcoin right now and see how it's going. So we are now trading at 19K. I would say we are now trading at the bottom of the trading range that we had established since June, and that's quite an important level to watch because last week Benz also just told us that we have to watch out for a retest to the previous support at 17.8K, right, Benz? And this is an important level that we have to watch out for, because if it breaks down lower and it's gonna look worse, and I don't think it's gonna end up good if it breaks below this level. And let's see how Ethereum is doing right now. Wait a minute. So Ethereum is trading at 1,200, 300, and I think it's standing very, I think it's quite solid, above the previous high there, and I'm spotting this this accumulation zone here. I think it will be a support area that we can probably stack some Ethereum here, because yesterday I just read news that Justin, our new boss, he purchased a lot of Ethereum back then when Ethereum was trading at around 1,000, and that's an incredible move because he just acquired a lot of Ethereum at the bottom of this cycle, and I think that's something very I'm impressed and also amazing, I think. Yeah. So without further ado, let's talk about the FOMC and also the CPI update, which was released last week. And Benz, it's your time. Yeah.
yeah.
Wait a minute. Let me get back to the PowerPoint. Just a minute. There you go.
Okay, so
Yeah.
last week, right?
Last week.
Yeah, we have this prediction that the CPI will actually exceed expectation. Actually, exceed like 5%, 8%, sorry, and it actually came true. So it came out 8.2, slightly hotter than expected of 8.1%. So it also means that sort of the US monetary policy is not really working right now. Maybe there's a lag behind, or maybe there's still a lot of liquidity out there in the market. So right now we are still market is still expecting some more rate hikes. I mean more aggressive rate hikes, given that inflation numbers came in hotter last week. So right now, you see, according to CME Fed Watch 2, right? This CME Fed Watch 2 is based on I would say the futures prices that actually from there they derive the probability of the rate I would say the interest rates moving forward during November, December, and so on and so forth. So right now for 2nd November's FOMC meeting, almost 100% of the market participants is factoring a 75 basis point hike. So we will see the US interest rate to go within the range of 3.75% to 4%, which is really high, given that the last time it came to this range was before, I think, 2008, 2007. So it's a really high interest rate, and we see how the market reacts on the 2nd November, which is in around 2 weeks' time. Yeah. And after that, for December's meeting on 14th December, another 75%, another 64% of the market is expecting another 75 basis points hike. So you see that the market is actually very, I would say, bearish on the market. Yeah, right now I would think that those who want to, invest in risky assets might need to maybe hold their horses and actually wait out this period. And right now the market is also factoring a terminal interest rate of 4.75 to 5% from January 2023 to September 2023. So it's a very long period of time. Actually, all this data can be seen from CME Fed Watch 2. If you just Google search, you can see all this data from there. And right now, since our last session, right now the market is on a risk-on mode. So right now you see all equities are all rebounding back from their higher lows. I mean their lows since last Friday. You see for last week alone, Nasdaq went up around 3.2%, and S&P 500 went up around 2.3% around there. So this is likely due to the US Q3 earnings report, which most of them, I think more than 90% of them, exceeded expectation. So right now, during this period of time, during this week, there's not many economic data released. So all this good news actually help with the current sentiment, hence the response. And also the US dollar has been weakening from previous highs of 114.5 around there. Likely due to the BOE pushing back their actually not really pushing back. They sort of solidify their stance on their QT. So they decided to start their quantitative tightening at the start of November. Hence, you see that the US dollar actually weakening. Yeah.
I see, Benz.
Yeah.
I think let's look at how DXY is doing right now. Let me just switch back to the chart and let's go to DXY and I remember last Thursday, during the FOMC meeting and also on the CPI data release, and then the DXY actually came back lower.
Yes.
Right. Yeah.
Actually, it shut down.
Yeah. But after 2 days of consolidation, and then it pumped up again from 111 now to 112.6, and I think it has some very strong momentum here. I'm expecting it to rip higher, and breaking its previous high, I think it's just a matter of time. What do you think about it, Benz?
Actually, right, on Thursday prior to release, the DXY actually went lower, and after that it rebounded sharply. Yes, then after that, following that, I think most of these bad news are already factored in that inflation numbers are still very hot. Hence, prior to that, the market is really like expecting CPI to be really high. And following that, like Thursday, Friday, there's not many bad news. And Friday is the earnings report coming out. So I think all this helped with the good sentiment, which resulted in the drop in DXY over the weekend, I would say.
Yeah, but the hype is now over, right?
Yeah, no, CPI is over. It's old news already, and everybody knows that the next FOMC meeting is going to be a 75 basis point hike. There's nothing that we can do about it.
Yeah. And also SPX, if we look at futures like US 500, and then it seems like it lost momentum here. I thought it's going to break its previous high because of the earnings came out better than what we expected, and then but seems like it doesn't get a chance to break its previous high, and equities are going down right now, lost momentum, and probably I'm expecting some downwards, maybe sideways and then downwards pressure coming in. What do you think about it, Benz? Right.
Right now, I think like although I would say like right now it's a risk on sentiment, but because it's like the increasing interest rate is always like bad for equities, right? So it's a bad sentiment, but the earnings are really good. So it's not a negate of all the bad and good things. And right now, I think moving forward will be like everything will be going sideways until the FOMC meeting in 2 weeks' time. Yeah, that's my take.
Yeah, you mentioned that. Let me just get back to the PowerPoint. Wait a minute. Okay, so you mentioned that the expectation for November and also December, most of the investors, they expect a very high probability of 75 basis points hike, both November and December. So I think we should watch closely, because if the rate high is not 75, maybe 50, and then I think we're gonna rally. That's why.
But we still have to look at the FOMC the members, how they what are they talking about during their speech.
I'm actually a little bit worried, because last Thursday I listened to Dali, and he and Dali said interest rate or inflation rate will be controlled or contained to 4% in the coming years. I mean, he is expecting inflation rate. Then I mean, we have to fight it for years, and that's not very good news, right?
I would say that like if you look, like, because inflation numbers is the index, right? So if this year inflation numbers are really high, and they implement monetary policy, like effective monetary policy on it, and following year, because there will be a lag, so the result of it will actually be seen like 1 year later, because for example, next year's January will be compared to last year's January, right? So if inflation numbers are really high on the January prior, the year prior to that, I would say that inflation numbers for the next year won't be that high if everything's under control.
I see, right? Yeah, definitely. These data are definitely lagged. So we also have to, just pay attention to the liquidity in the markets, because we want to see, if there's extra liquidity being added into the market or being withdrawn from the market. And RP is definitely an instrument that we have to watch out. It came back down 2,300 billions of dollars. It took a round trip, and there was a spike, but it cooled down, and therefore no extra liquidity is being withdrawn from the market, I would say. And then let's look at the chart here. BTC versus inverted RP, smooth in 5 days SMA. I think that's a helpful tool for us to determine the effect of market liquidity on Bitcoin, and now we're seeing both of them are going sideways, and I'm not expecting any spike or any drop in the near future. So probably more consolidation for BTC around 18K this area. And I also wanted to share some interesting on-chain metrics, but that I'll leave it at the end of this session, because we have some other things that we want to share with you guys. So something came out hot, the Starknet tokens. And Starknet is actually a permissionless decentralized validity rollup, also known as a ZK rollup. And it operates as a layer 2 network over Ethereum, enabling any decentralized applications to achieve more scaling for its computation. And the Starknet token being I would say a good competitor in layer 2 in layer 2 infrastructure. And then it's going to release its own tokens in October. And I would like to share this piece of news with you guys. So let me just switch the screen to website here. Wait a minute. Here, the Starknet. We'll also cover the tokenomics of Starknet tokens later, but just I like to share a piece of news with you guys. Just the founder of Starkware announced that they are going to release the tokens in September, but unfortunately there was a delay, but Ben, the founder of Starkware, said that it's actually been delayed by a month, and actually it will go on chain within this month of October, and that's what we have to pay attention to. And let's look at, I think you'll be interested in looking into the tokenomics of Starkware, and let me just show you the tokenomics of Starkware here. Let's have a quick overview here. So 70% of Starknet tokens will go to Starkware investors, and 32.9% will go to core contributors, Starkware and its employees and consultants, and Starknet software developer partners. And that basically means that it's reserved for the team, right? And then 50.1% granted by Starkware to the foundation and marked as follow. There'll be inside the 50.1%, there'll be 9% going to community provisions. For those who performed work for Starknet and also deployed its underlying technology. I think it's a little bit confusing here, because 32.9% goes to the team, and now this 9%, I'm actually thinking is I'm actually thinking this 9% of tokens will go to the people who are very similar to the core contributors, right? It's a little bit confusing here, but let's just look at our data. And then 9% will go to community rebates, and the rebates will basically cover the cost of onboarding Starknet from Ethereum. And to prevent gamification, community rebates will only apply to transactions that occur after the rebate mechanism is announced. And 12% will go to research and work done to develop, test, and deploy and maintain the Starknet protocol. And then 10% to strategic reserve a fund ecosystem activities that are aligned with the foundation's missions. I explained that's not important. And then 2% is donations, and 1% is unallocated. This is a little bit suspicious here. Unallocated, that means the team is going to keep it or not. That's it, and that's what we have to think about. So overall, what do you think about tokenomics, Dr. Wei? Is definitely you have any thoughts about its tokenomics?
I think it's specific and somehow reasonable. Although it shows that 30% get to the core contributors, but I think the like ecosystem developer developers also in these groups. So I think the team or the project itself earns a lot of rights to control the token allocation.
Yeah, you're right. It's definitely, yeah, got a good point. And yeah, they basically the allocation of Starknet tokens, just here, and they also have a pie chart here showing the allocation of Starknet tokens. And then I think the more heated topic will not be Stockware and also Starknet token this month, because more attention will go to Aptos, because Aptos just launched today, and there are a lot of things going on. Why not just let's have a view of Aptos price right now. So let me just switch back to the trading view. Wait a minute. And then here we have the APT USDT, and then let's look at the price on FTX. Wait a minute. Here. So it started from around 3.5, right? 3.8 something, popped up to 12.4, 4x or 3x, and then it get dumped to $6.7, and then now it's consolidating between 6.7 and 8.5, this range, and just some salary consolidation, and the price action is I think it's really like roller coaster, because I think a lot of people are saying that the investors of Aptos were dumping the tokens on retail traders on exchanges, and that's I think that we are going to talk about later. But first of all, I think some of you might not have heard about Aptos, and actually Stephanie will explain, just give you a general overview of what Aptos is, and then why it's very heated right now and everybody's talking about it. Stephanie, can you share some thoughts about Aptos with us?
Yeah, we know that Aptos is very famous because it's originated from the Libra project, which is launched by Facebook in 2019. But Libra has repeatedly encountered policy resistance due to its grand dream of issuing a global stable currency. And later, the Libra project has reorganized and renamed the DIM, which became an open source blockchain project. And in 2021, Facebook changed its name to Meta, and it announced that DIM was acquired by another corporation. So after the acquisition was confirmed, some of DIM's original crew announced that they could try to restart the project in the form of Aptos. And we also know that there are other two other projects also are layer one blockchain named Sui and Linear, also that originated from the Libra projects. So we know that Aptos inherits many features of DIM, such as Move language, which is very friendly to the developers, and I think it's better than the Solidity. And the DIM consensus mechanisms also that was applied in Aptos, and the parallel processing technology. So it has a high performance in the test network, and the TPS was about 116,000. So I think that the Aptos and is better than the Ethereum in performance, and even better than the Solana. So that's why people are focused on the the new layer 1 blockchain, and many investors give a high value on the Aptos. We know that many famous investors like ACCZ and FTX also invested these programs. So it's very, very popular these days, and many exchanges like Huobi and FTX also listed the Aptos tokens.
Yeah, definitely. The team's background has actually captured a lot of attention and also a lot of popularity among the crypto community, because those guys from Facebook, and that's a very good point there. And Aptos, you mentioned that Aptos can also process a lot of transactions per second, which makes it scalable and also reliable. And however, some people just pointed out that during the launch there was actually a problem, because the team disabled the Discord, just after the launch. The Discord was disabled, and users could not chat or ask any questions, and the team only just opened a few channels after disabling Discord, and most of the channels are actually closed for a while. And also some guys pointed out that transactions per second was actually 4 just at the launch of Aptos. And Stephanie, would you like to just share thoughts on this suspicious idea? So, yeah, some people are just being suspicious about this thing. Four transactions per second, and rarely some not any on-chain activities going on. What do you think about it, Stephanie?
Yeah, many people compare this TPS to the Ethereum and Solana and say the Aptos is not so as expected. But I think the TPS now is very reasonable, because there's no project that's built on the mainnet, and few transactions even these days, and the ecosystem is also not so popular these days, and we can see this more in few days or months later, and I think this might be changed.
Yeah, I think you got a point there. Yeah, it makes sense because the project's just launched, and then you cannot expect that it has so many on-chain activities going on with, and we can't compare it to Solana, because Solana has been around for years, and Aptos just came out on chain, and that's why it has fewer transactions going on chain, and that makes sense. I think it's reasonable. And also some guys just made fun of Aptos because there were problems, and Aptos just disabled the Discord for some reason. And also some guy just captured that there was a massive ask order being placed on Binance, and that order accumulated up to 190,000 of Aptos token, and that dumped Aptos from $13 to $11 or even $10. So it's a little bit interesting here, because I'm not expecting retails to have so many Aptos since launch. And what do you think about it? Any thoughts?
Where the many people thought that this kind of situation is because some people built many addresses to get the airdrop and participated in the test network. And now I'm really regret about that, because I didn't join the on testnet. Yeah, I think one address would get 115 Aptos tokens. It's a lot of money. Yeah.
It's free money actually. So this
Yeah.
guy,
And
this
with
guy
the
has
no, you didn't to pay anything to get the airdrop.
all right. That's actually free money. We just missed out the big prize. And this guy, dumping 190 thousands of Aptos. So that basically means this guy opened more than 1,000 wallets, right? To
Yeah.
accumulate that much of Aptos, and then
Yeah,
dump.
this just might be made by some robots.
Oh, okay. So robots. I see. So this guy must have made a tons of money from trading Aptos. And I'm just thinking about, since Starknet is going live in October, and would it be a little bit similar to what we are seeing Aptos doing on the exchange, the price action? What do you think about it, Stephanie?
You mean
What
what?
about Starknet? What about Starknet? Since
Okay.
its launch, it's launching its tokens, right?
Yeah. You mean the Starknet compared to Aptos?
Yeah,
the
yeah,
token
yeah,
allocation?
yeah, yeah.
Because that's the token allocation of Aptos, it just publish or give to the public the day before it's listed on exchanges. So many people thought it may not so serious, and the allocation is too simple and not so specific, and many things that we don't understand what it really mean. So, but Starknet has give to the tokenomics very earlier, and I think and also the airdrop of the Aptos is really surprised because it just give out this morning, and I didn't predict its price because of the airdrop. Yeah, I may think that it will the price of the Aptos will be in the $15 or more.
I
But
see. Some
yeah.
people also said that the token allocation for Aptos is not fair because retail investors cannot get Aptos token from a maybe an investment instrument. They can just mint their tokens via participating in connecting their wallet to the chain and getting the airdrop, and that's what we can get the Aptos. And however, other investors, institutions, they already acquired so many Aptos, and it's really important to also notice their vesting period, right? You heard of the vesting period of these institutions?
Vesting period.
Yeah, their tokens are locked maybe for 1 year, right?
Yeah. Yes, and I think it's too short for compared to many projects. I think many projects will lock the investors for 2 or 3 years. So 1 year for them, and I think it's very dangerous because 1 year after, and there will be many tokens released, and that's the maybe still in bear market.
I see. Yeah, that will pose a lot of selling pressure to the Aptos community, right?
Yeah.
So yeah, that's right. And I think we missed something about the Starknet because you know, the Aptos already over, the hype is over, because we already saw the price action. It went down from $13 to now trading around $7. The hype is definitely over. So we just missed out, you know, the free money. What about Starknet? I think is that a reasonable speculation that we can do with Starknet? What do you think about it, Stephanie?
Well, Starknet is one of the zero knowledge law app solutions in layer 2, and it's still very famous, and we can see that compared to Arbitrum and Optimism, and I think the Starknet is well, in the TVL, the number is less than the two law apps, but I think the decay knowledge law apps will be the future technology and will be the main solutions in the layer 2 networks.
See, I think Starknet has not released the token allocation. Besides the token allocation, also the investment round, and also they have not released the lock-in period for tokens, right? Because
yes,
they have not released their token, and that's something we can pay attention to in October, because that will be a heated topic. Starknet releasing their tokens. And they also has not released whether retail can participate or not. Let me just get back to the website there. Just a minute. Yeah, here. I just went through an article posted by Stockware, and you know, people are interested in acquiring Starknet tokens because they are releasing tokens in October, and then it says there are no shortcuts to receiving tokens, and new meaning design give precedence to developers of core infrastructure and dApps as well as other contributing to the ecosystem security and health. What does it mean practically in relation to token? It just hasn't stated whether how can we retail can, you know, acquire the tokens as many for developers and stuff, right?
yes.
Yeah, maybe just wait for the team to announce further news about the tokens. And yeah, so basically right now we can just, you know, stay tuned to Stockware.
Yeah, I think
yeah.
sorry. I think the only thing that we know is there won't be airdrops like Aptos. So I think they will reward Starknet users first, and from there maybe when they list on exchanges, users will get access to their Starknet tokens.
Yeah, you're right. I want to participate in it.
Yeah, I think for now there's no any news for now, but from this website we only can see that there won't be any airdrops, that's for sure.
Let me just get back to the PowerPoint. So yeah, make sure just stay tuned to Stockware's website, Medium, and also their Twitter, in case they have some news about, you know, getting airdrop or something like that. So moving on, I want to share some BTC metrics with you guys, because I mentioned the BTC has been trading sideways and, you know, has been consolidating for months since June. And, you know, consolidation, basically, I would like to think either is accumulation or is distribution. Actually, I would like to, you know, just, you know, hear from you guys. What do you think about this current situation, Ben or Stephanie? What's your view on BTC? In my opinion, I think is more likely to be in an accumulation zone. That's just my intuition, not financial advice though.
Yeah, I think the bottom will be very will happen in few months.
Few months, okay. Because we are seeing some let me just share this metric with you guys. So I scrolled to Twitter and I came across this TA trader Alan, and he posted a picture of Bitcoin, a very nice bull flag formation. And I agree that if we just view it in a log scale, and it's definitely a bull flag, right? But down there, Alan had the stochastic oscillator, and that's monthly interval. And then we can see that in the past cycles, for example, in the cycle of 2012, the bottom of 2012, and then the bottom which happened in 2015, the bottom in 2019, they actually had a similarity. The stochastic oscillator actually reached a bottom area, and it's actually comparable to the value we are seeing right now. The stochastic oscillator, monthly stochastic oscillator, is now reaching previous low, and that's a point that we have to just watch out, because it's bull flag. I think the bull flag is still intact. It's still there, and I think it's reasonable to take this analysis as a piece of evidence. We might be seeing some accumulation going on here. What do you think about it, Benz?
Based on this bull flag pattern, I'll definitely say that right now we are in the accumulation phase. However, from my eye, I think like the bottom maybe around this range to around 13,000. However, we can't time the market. So
right.
I think that's the most important thing. If I can time the market, I think everybody can be a trader. So
Right. That's
so
right.
I think that right now I think the most sensible way to actually, like, if you want to like accumulate more Bitcoins, is to average down, because I think average down is the most I would say sensible way to invest. I mean, like, in terms of investing, not trading. So I think right now is a very good time.
Yeah, talking about accumulating more Bitcoins, I just came across a well, and this well has been accumulating Bitcoin in previous bottoms, and it's interesting to watch its move. So let me just share a chart here. So we have Bitcoin's price here, and also we have the activities of this well noted in the red arrow. So this well has been accumulating Bitcoins at the very bottom, I would say, because back then in 2018, at the end of 2018, maybe December 2018, this well accumulated a lot of Bitcoin there. And then during the bottom of 2021, this well also purchased additional Bitcoin to his wallet. And then in June 2022, this well made two separate purchases. I think he missed that one. His actually now leverage making his cost basis lower, because you see my mouse here. I think he purchased after the implosion of 380, right here, but the market collapsed again. I'm back to here, and this well purchased again. He just missed once, right? So far, we can see that, and then we can see the block here. This guy purchased additional, is 12,000 Bitcoin here, and then additional 12,000 Bitcoin, 12,000, and accumulated up to 54,000. So many Bitcoins here. I think it's like 1 billion. Yeah, 1 billion. We're sent in the block with the average transaction being 28.9 BTC. And that's a super well here, and his activities are actually, I would take this as a hint, or I think it's helpful for me to assessing the market. What the big whales are doing definitely has some I would say has some hints there, because we can also, besides looking at what whales are doing, we can also, look at some useful metrics. For example, the holding waves is also a very popular metrics being used by analysts. The holding wave actually measures the percentage, the distribution of Bitcoin holders. So right now we are seeing that short-term holders are coming to a very low, which means that short-term holders already sold their Bitcoins, and what's left is long-term holders. And we are actually spotting long-term holders, 1-year holders, coming to a very high level. And what that means is actually, restricting the supply of Bitcoin, because these people tend to hold the Bitcoin instead of selling the Bitcoin. And that resonates with previous market bottoms. During market bottoms, we tend to see that short-term holders already sold the Bitcoin, and what's left is long-term holders. And I think, Ben's got it right. We can't time the market, but I think we can actually spot some nice accumulation zone, and that we can do DCA. That will be a nice thing that we can do. We can locate a bottom, but we can locate a range, which the bottom might have a chance of happening inside the zone. And holding wave is one of the metrics that I think you guys can can have a look. And also we have the RHODL ratio. This one is another metrics, on-chain metrics, which measures the cost basis of recent Bitcoin purchases, comparing to the cost basis of the purchases made 1 to 2 years ago. And this metric also shows that we might be seeing a bottom here, because this metric is now entering a green zone, which signatures the accumulation zone. And it's actually assessing the cost basis of recent Bitcoin purchases, and that means that people are now purchasing cheaper Bitcoins comparing to 1 to 2 years before. And yeah, that's what's actually that's this metric what tells us about. And then we also have the MVRV Z-score, and this one is more helpful in my opinion, because it measures the realized price. It measures how far the price goes from the realized price. So realized price is the cost or average cost basis of all Bitcoin purchased. And a lot of traders will take the realized price as something like a reward or a fair value for Bitcoin. And if Bitcoin is trading below the realized price, and then that's a discount. If Bitcoin is trading above the realized price, traders tend to take profit and sell the Bitcoin for profits. And then this MVRV Z-score just measures the distance which price travels from the realized price. So right now we are seeing that the MVRV Z-score reaching the bottom, and another metrics telling us that bottom is near. And lastly, we also have the Bureau multiple, and this one measures the revenue of miners versus their historical norms. So when this indicator dips into the green accumulation band, which means that miners are now under significant stress, and they don't have revenue, and seller pressure, it will be low, right? And it also signifies the bottom of Bitcoin. We can see it from historical value. When it dips into the green zone, we are seeing the Bitcoin bottom right here, 2012, 2015, 2019, 2021, maybe 2020. What do you guys think about these metrics? Any thoughts, Stephanie?
Yeah, I think yes, all the indicators shows that the bottom is near, but I really wait for the real bottom that around 10,000 to 12 thought whether it could be possible.
All right. Yeah. What about you, Benz?
I think I still think right now it's not the time to start accumulating because from macro point of view, I think the best time to start is actually
When the Fed pivot, right?
when I will say when the Fed pivot, I would say when you reach, I think it's around January. I think January will be a good time when the terminal interest rate is at almost its peak. Because right now we are looking at 2 more 75 basis point hike. And if you look at other data like M2 supply data and also the Fed's balance sheet, the amount are still, the balances are still at a very high range, as is actually way above pre-COVID levels also. So I would say that with a lot of potential liquidity being sucked up in the next few months, I would say that is January will be a good time rather than right now.
I see. Yeah, I see. But you know, some whales, they just have a lot of money, and just like Michael said, right? They don't care about the timing. They just keep adding Bitcoin to their wallet because they think that, you know, Bitcoin will be the future of the store of value. And you know, talking about this, I also have some thoughts that I want to discuss with you, Lance. You know, some people just said that you know, the dollars you know, other nations are actually challenging the status of dollars, and also because of this, you know, people are looking for a safer store of value. You know, we had gold before, but now people think that gold is not very convenient to carry around, and you know, the gold assets is also being kept by, you know, some custodian, and that's where Bitcoin plays its role, right? Bitcoin is decentralized. Bitcoin is, you know, borderless. You can transact Bitcoin from anywhere or anytime, anytime, anywhere you like, and also it's peer to peer. You don't need to transact via an agent or, you know, a middleman. And what do you think about, you know, Bitcoin taking over the store of value, the, you know, the ultimate store of value thing?
You know, previously, what people say, like, you know, I would say maybe our parents, and older generation, they will say that gold is like a hedge for inflation.
Yeah.
Right. So so if you see, like, right now, which part of inflation hedging are you looking at if gold prices is at 1.6, 1.7K right now? If it's like, if you're looking at inflation numbers, shouldn't it be like 2.4, 2.5K?
Yeah, you made a point, right?
like,
yeah, I think if gold is a hedge against inflation, then why it's dropping right now? Hey, I also want to, you know, share. I just want to look at the chart of gold because it will be interesting to spot some pattern there, because, you know, it just made me I just remember this one. You know, I would like to share this thing with you, Vince. You know, you heard me talking. You heard me talk about Wyckoff, right?
Yeah.
Okay. So I'm actually a little bit suspicious about the pattern I'm seeing here, because a double top plus. Is this a Wyckoff distribution pattern?
It's a little bit.
So wait a minute. Let me just, you know, let me show you a very typical. Oh, just go to Huobi research, because I previously published a report which I talked about Wyckoff. Oh, by the way, we have a new piece of research here. The leader of new layer one chains, which talks about Aptos. So we also have our newly published report, and make sure you guys, you know, just scroll through this report and read something that you find interesting. But right now, I want to show you the Wyckoff here. Yes, previously I talked about this thing, and oh, yeah, I mentioned that the Ethereum was in a process of Wyckoff accumulation, which played out very nicely. But I didn't put the Wyckoff distribution here, so let me just show you here.
So you mean like right now it's like in the inverse Wyckoff?
Yeah, absolutely. I'm actually suspecting that we are actually seeing a distribution, a Wyckoff distribution pattern on gold. Let me just show you the price chart here. No, the pattern here real quick. Okay, just a minute. Yeah, here. Oh, do you see this pattern? First of all, we have buying climax, and then we have some secondary text here, and then ultimately we have the UTAD is the first after distribution, and then I think we are now trading below the support lines. I'll draw later, right? It's a sign of weakness, and then we are approaching freeze E, the markdown. I think the whales already accumulated a lot of shorts in gold. Let me just show you here, right? If we put a horizontal line here, I think the fair support line is here, and this area I think is a little bit I would say it's very similar to the last point of supply, right? And if we look very closely, you just see the resistance line I plotted here. No, it rejected 2 times, right? It's a false breakout here, right? It's a false breakout. I think it's false breakout. And also, if you have a Fibonacci ratio 618, and then it resonates perfectly with this one. You see that, Benz?
Yeah.
618 Fibonacci ratio. I think it's a false breakout from the big resistance there. It's the neckline. It's the neckline, right? If we just look at 2 days, 3 days, yeah, 3 days, 3 days, or maybe 12 hours is good. Yeah, 12 hours. Yeah, just a minute. Here, yo, I just think that it's just too similar to the Wyckoff distribution pattern. The resistance line is being tested multiple times and rejected 2 times, 3 times, 4 times here. 1, 2, 3, 4, and also a false breakout resonated with 0.618 Fibonacci ratio. And I'm really suspicious about the distribution scheme here, the whole distribution area here. UTAD, the buying climax, secondary test. What do you think about it, Ben? Is gold going to 1K or something?
You mean like gold is going back to like pre-COVID levels?
Yeah, because you talked about if gold is really an inflation hedge, and then we're definitely seeing the price of gold moving up, right? But now it's not, and also we are seeing a Wyckoff distribution pattern here, and it's really suspicious, which makes me even more keen to hold more Bitcoin instead of gold, right? That's my view.
Yeah, I think right now, we used to see a lot of like hot wallet hacks on Bitcoin and stuff like that, but recently it's all hacks on bridges. I think mostly on hack on bridges, and I think like if you want to hold Bitcoin as a form of inflation hedge and also in a form of investments wise, I think it's a good strategy if you want to keep appreciating an asset. And also if you have really like a long-term view on like super bullish on Bitcoin in the long term, you can just accumulate Bitcoin right now. I mean, like, you don't have to listen to me to wait till like January and stuff.
Yeah, right. Just like Michael Saylor, what Michael Shard is doing.
Yes, like if you look at people from like within the crypto space, everybody is like holding onto Bitcoin or buying Bitcoin because right now they feel that current price is really low, and we have been trading sideways for the past maybe 1 month, right? And a lot of people may think that it's already the bottom, and right now it's a good price. So and is super bullish on Bitcoin. So yeah, I think if you think in the long term, buying now or averaging down now it may be a good strategy, in form of investments and inflation hedge.
Yeah, that's right.
Mm.
But not investment advice though, just a kind of reminder.
Yes, definitely.
Yeah, do your own due diligence, and we don't have much time left. We're running out of time. We're at the end of session, so let me just go through the Candy Drop event quickly. So make sure you have the Huobi app only and trade to earn crystals, and then spend crystals to join the Candy Drop event. So same as the previous Candy Drop events, we will pick 5 lucky stars and we'll award him with a special airdrop worth of 100 USDT. And the lucky star will be notified SMS. So make sure you stay tuned and trade on Huobi app and join the Candy Drop event. Make sure you register, and then hopefully you will get the airdrop. Okay, so lastly, I want to do a little bit of sharing here, because here. So I want you guys to just go to Huobi research and make sure you're signed in, and then we have a lot of articles here. We just recently published an article about Aptos, and also we have the weekly report, which highlights the news that's being discussed in the crypto market. And also, yeah, make sure you go through these reports, and they are very I would say informative, and also which help you learn more about crypto. So here, and thank you as always, thank you for listening, and then I hope you get the airdrop. And then, yeah, just stay tuned to our website, www.huobiresearch.com. And also follow us on Twitter. And yeah, see you next week. And
see you.
Yeah, thank you, Ben. Thank you.
next
Thank you. Thank you, Johnny.
Bye.
Yeah, see you next week. Bye-bye.